Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Monday, October 10th, Columbus Day, 6:54 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Pretty quiet on the futures front. I got equities mostly flat. Bitcoin's down 0.8%, but pretty quiet on oil and the rest of the futures complex. We do have the bond market closed today for Columbus Day, so that may put a somewhat of a damper on wild moves, just because everything has been tied so much to rates and everything. With the bond market closed, we may see a little bit more docile trading after Friday's wipeout. So. And also, we've got an earnings lull really until Thursday. It ramps up. I will get you an earnings calendar posted on the website, one or the other, to give you what to look forward to. But they really don't start till Thursday, and then Friday starts with the big banks. So anyways, that's a look ahead. So let's dive right into the charts. U.S. dollar, we had the vertical move here. We had a pullback, and now ramping again. And you know, as we've been discussing, the strong dollar is sucking global liquidity out of the system. Basically, a bearish sign for stocks, and it's been that way for really the whole year. So we still have to contend with that. We've got TLT testing the prior lows here at what is it? Well, 101. I think the low was 100 spot 50. I mean, plain and simple, that's got to hold, right? You get a break here, and then we're really in the weeds as far as, I mean, we already are in the weeds, but deeper and deeper into the weeds, as it were, on rates. So just remember, TLT down is a bearish factor for equities. You know, if you got the dollar going up and the TLT going down, you probably got VIX going up. And we saw it rise 3% up here in the 3150 range. So, I mean, from a technical standpoint, you can see, you know, we had the breakout in volatility, and then we got a solid back test back to the bottom of the channel, back to lateral support. And now we've broken out again. So in this posture, I mean, the door is certainly open for a flash move back up to these highs again, for sure. So, you know, having long-term positions on the long side is probably, you know, problematic. Hard to take a big bullish swing at, you know, a VIX of 3150 or 32. Just my opinion, but you know, with the posture of the chart like this, certainly open to some, you know, kind of a panic move. Bitcoin rolled over last week, really got capped here by the 50. We touched it on more or less 3 days, and now it's rolling back down towards 19,000. And so that will be, you could easily put a downtrend line across the top of these peaks. That would give you a nice visual reference. But if there's some kind of a, as we've been saying all along, a move that sticks below 19,000, there's very little technical support down there until you get into the 13,000. So keep an eye on that. We have had a number of fake breakdowns along here. I think, if you are committed to trading it, you just got to keep taking that signal and respecting your stops, right? You don't know, you didn't know ahead of time that these breakdowns were going to be fake. Just like today, if it drops down below these levels, you don't know if that's the one that's really gonna stick. But you can see, it's knocking on this door repeatedly, and the moves higher have been weaker and weaker and weaker, and you've got a big, bearish right triangle here. And at the very least, let's see, we've got 19,000 to 24,000 as the range. So, that's a $5,000 measured move. That would take you down to 14,000 just on that basis. And then when you figure in technical support, maybe $500, $1,000 lower than that, you'll have to judge how you, first of all, if you want to trade it, and then how tight you want to leave your stops above. Or what you could do is just find these lows, and maybe you want to move your trigger down to, let's just say 18,500, something like that. Move your trigger down rather than at 19,000, and continuing to be frustrated by these fake moves. Move it down a little bit, and then take your entry at a somewhat lower level, like I said, 18,750, 18,500, because I think once this thing gets going, I think you are going to get that move down. Oil, boldly green on Friday, up almost 5%. Clearly taking out the 50 and challenging the 200 here. I really think you've got some resistance here at 95, but above that, then you've got 100 up to the 50% retracement zone on oil. I was disappointed in the price action of the oil equities. They started out strong, up 2.5% or so on Friday. The Exxon Mobil's, all of the names really that we've highlighted, but then they fell back. And I wanted to remind you of something, is that when you're looking at any stock, really 65% of its direction is going to be dominated by the stock market itself, then 20% by the sector, and then about 10% by the stock itself. So if you've got a market that's going to lose 3% in a day, yes, you could have a strong sector like energy that outperforms, and it did. If you look at energy, it was the strongest sector on Friday, but it's like a salmon swimming upstream, that if the market is down significantly, that's going to be a big drag no matter how strong the sector may be, and you may end up with a red day, even though just minimally red, versus other stocks that are taking an absolute beating. So keep that in mind, that energy, even though the commodity might be doing well, which it is, we've got a breakout price basically at the 200, the overall stock market, if it continues to go down, will be a drag, or at least throttle back the energy moves. Gold has not been doing anything. Came up here to the downtrend line and has pulled back. When we go to the oscillators, we peaked out up here at 25 and now have moved down. We're going to have to watch our oversold levels again at minus 60 if this thing continues to go down. Same thing with the NASDAQ oscillator. Peaked out at 22 and now is back down to minus 23. Not as far along as the NASDAQ oscillator, but still moving back down below the zero line. So appears to be heading south. But again, if you've been with me any amount of time, this thing is only really directionally significant at the extreme overbought or extreme oversold levels. So we really can't take a whole lot out of this, out of the oscillators at this level, other than to just watch it and be aware of its posture. SPY, we're right back down to the June lows. We had an undercut the other day and then a little rally that was ultimately pinned down by the 20 EMA and the downtrend line. So really right now, yes, we've got this little undercut low that may offer some support, but really things look dangerous if we lose this June low today. So we really need to hold the line here. And here you see it. These were the June lows back at 362.50, and now there was that little undercut about $5 lower down here. And what's interesting here is and it's important to look at the technical action just for your your development as a chartist, as a technician. We were pinned below the 60-minute downtrend channel. We had this fake breakout, but then we reclaimed it here, and then that opened the door for a move back up to the top of the channel. And I think it's interesting to note that you look at this needle bar right here, and we had nearly a perfect touch of the top of the channel, and then that got rejected, and now it certainly looks like the door is open, to do a round trip of bottom of the channel, top of the channel, bottom of the channel, right down here. And then that would be, if this doesn't hold, this would be, an objective level to watch, either for a breakdown or a bounce trade back up into the, back up into the channel, back up towards the midpoint. Same thing here on the Qs. We did break the downtrend line, but then we got capped by the 20, and then we had the gap down on Friday. Bad day at the office, almost 4%, right back to the June lows. You'll notice the undercut there. Same kind of a look as we just saw on the 60-minute chart of the SPY, working in the bottom half of the downtrend channel. Then we broke out, little move here above the downtrend line, but then the gap down on Friday and back down to the midpoint. So if we were to lose this 67.50 today, I would imagine we would be looking at a move down towards 260, towards the bottom of the downtrend channel. And we talked about the other day, but notice the island top reversal. Gap up here, and then a gap down on the other side forming this island cluster that, for lack of a better term, got hung out to dry. The longs did not get a much of an exit, and that's what the island does. Over here, it gapped up. Longs might have been sitting in here saying, I want to get long in here, or shorts may have had positions, and then the gap up traps both of them. You either got to chase it, or if you were short, you did not get a good exit. And then the same thing over here. If you were long, you say, oh, well, I'll put my stop just below, but then you don't get a chance to execute that stop because it gaps down on the other side. So back down to the midpoint, I would be watching this 267.50 like a hawk. Same idea on IWM. Really, we had 4 days, 3 or 4 days right here where it couldn't get over 177, 176, 177, and then we had the gap down on Friday. So if we look at the chart, you see another island top here, gaps on both sides. I think there's support at 167.50, or excuse me, 167 right here at the midpoint of this trading range, but the door is certainly open until or unless price gets back above 170 to come down here to 167 and then potentially even back to 164 at the bottom of this old trading range. Meta been operating in this $7 range, or really $8 range, from 134 to 142, and now we broke that. So it's paramount for Meta to recapture this 134 to have a chance to go back up to the top of the box at 142. And you can see how well price has respected that 134 area. We had a touch here. We had we had 2 reach downs here. Didn't quite make it, but before reversing. But then we had another touch here. Bottom of the box, top of the box, bottom of the box. Ping pong trading. So now, if Meta were to rally and recapture that 134 from a technical, tactical standpoint, you probably want to be a buyer there just for a technical move, either back to the midpoint at 138 or all the way to the top of the box at 142. Apple more or less got rejected at this gap at the midpoint of its downward channel. Again, the island top right here, gap here, and you can see that it really had trouble at this gap at 146.50. We spent the better part of several days right at that level, and it could not take it out. So if you were actively trading that, you definitely had an objective level to shoot against. If you were thinking on the short side, there were a lot of opportunities right in here to take a short with a stop in the gap. And then if you had that, then of course you had a great day on Friday, down 3.7%, which is a lot in dollar terms. You went from 145.5 down to 140, so that would have been a really nice trade. Down here at the bottom, we've got a support level at 140, but then we've got this undercut low at 138. So I think 140 is definitely your pivot point for today. See if I can get Tesla. Now this is the daily chart. We've got these June lows down here at 210. I think the door is open for that move unless and until price can recover this 234 area right here. So if you wanted to actively trade that, even though we're here in the more or less no man's land, really the only thing you can do is key off Friday's closing price at 223 and then see if you get a break higher or a break lower from 223. And if it starts to fall apart below 223, then you see there's not a lot of technical support to hold it back from going down to retag the June lows. And given, we've just gone through, we've gone through the indexes, we've gone through Meta, we've gone through Apple. All of them are either at or approaching June lows. So why is Tesla going to be that much different? I would favor a move down to the June lows, at least for a test. Same thing with Microsoft. We're down here at the lows. We another island top, gap, went back into the old trading range. We know from our experience that's never a good thing. And then your target becomes the bottom of the box. And we got that move all in one day. So we went from 240, 250 on the initial gap down, and then right to the bottom of the box at 235. It's got to hold. Otherwise, you've got a measured move of $7.50 from 235 to 240, 250. So, do the math. 7.5 from 35 puts you into the 227.50 range, and now you're back into the downtrend channel as I've got it drawn, and then that opens up a whole nother range of downside. Amazon, gap, opened up at 118 and went to the midpoint at 115, and you can see these lows down here at 112. I think today you can use 115 as your pivot point. You can be long above or short below, looking for a retag of these lows. And then that makes 112 super critical. Why? Because with a $6 range, you go below 112, then you're looking at 106 as a measured move target on Amazon. Same idea. Google was trying to break this 103, we said was an important upper pivot with this large volume over price bar. Now you're down at the midpoint of this old trading range. You get a break below 99. I think you can almost pencil in 97, and then you're firmly back in the downtrend channel. And then with a $3 trading range below 97, then you're going to be looking at 94. And remember, if we go back to the daily chart, we've got a big measured move that's still in place for 91 on Google as a technical target on the daily chart. Netflix, real bad day at the office, down over 6%. We had the gap down and then undercut 234, which was a big pivot point. Why? All this resistance and then all this support. Tried to get back above that 234, could not do it, and then it just let go and filled this lower gap. If you were trading that and you caught it. Excellent trading. And now notice from a technical standpoint, we're back down at the bottom of this value range. And that's what made 234 so important, because we had spent a lot of time above, we've got a lower value range here and an upper value range here. And 234 was the pivot point between those upper and lower value ranges. And once it went below, then it made a fast move down to the bottom of this value range. So now 224 becomes paramount, because below that, then your support falls away and it opens up for a move down to 220 and possibly even down to this 216 area where you had the prior lows. Semiconductors, I don't know if you saw it yet, but the Biden administration continues to turn the screws on export restrictions of chips to China. That has really weighed on the sector. Had a mini breakout here, but then the gap down and down to the midpoint of this $10 wide range. As long as we're below 190, I think the door is open for another test of 185. But then any break of 185, then that opens up the door for 175 on a measured move basis with this $10 wide trading range. So I'd certainly have an alarm at 190 and 185. ARC, we saw the horsepower to the downside with tech under pressure. Got to the midpoint. Looks like we're heading, down towards the bottom of the box where we had these prior lows. You can certainly fine-tune this on the hourly chart, but just from the daily chart, you got to get back above the midpoint here at 1675 to have a chance to go up to the top of the box. Otherwise, this looks like a little, kickback rally. Draw your downtrend line across these tops. That would be your resistance. And so at this point, given the move on Friday, it looks like this is destined for the bottom of the box at roughly 15. Flagship fund, there's that downtrend line. We had a breakdown and a back test of the old range at 41, and now it's broken away. I would have an alarm at 36 for a potential breakdown and move lower from there if that can't hold. And then wrapping up with ARCW, it's already at the lows at the bottom of the box, and this one could be potentially a big move because the range is much wider. You've got you're right here at 46, and your high of the box was 59, so that's $13 on a measured move basis on a break of 46, sending it, opening the door for a much more substantial move down. So I think holding that 46 area is going to be paramount for ARCW. So got to hold it here, guys. If we can't hold it here, then it looks like test some lower ranges and some more downside opening up for a lot of these charts. So trade with an open mind. Remember, bond market closed today. May not see the volatility. We've got the oscillators heading lower, but not really, a directional cue. I would be watching the dollar TLT will probably be muted today just because the bond market is closed. And keep an eye on the VIX above 30, which leaves the door open for a flash move up to the prior highs around 36 or so. So let's wrap it up there. Hope you got something good out of the charts. Hope you guys had a good weekend and are ready to hit it hard this week. So if you're new to the channel, please hit the subscribe button and the alarm bell. And then over in the show notes, find the link to the blog site where you can drop in your email address. It takes all of 15 seconds. Then you'll get all of my content right in your email box whenever I happen to publish something. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading.